Hi, I'm Grant Stephen.
And I'm Kris Bernier.
And we're the Two Investment Guys. This week, Kris and I want to turn back to the markets and talk about some of the things that we're seeing there. Just quickly, if we look around the globe, we've got the TSX is down about 2% so far this year. However, the S&P 500 in the US is up about 8%. London and France are down about 1%, while Germany is up 8% as well. And Hong Kong is down, Hong Kong's up 5% and Tokyo is up about 2%. So really, once again, we have sort of mixed returns, a lot of volatility going on. It's interesting, Kris, to note that markets tend to move higher when you strip out, the bias is to go higher when you strip out all the negative headlines. It doesn't really need anything positive. And what was interesting, some of the work that you and I did is, the second year of the last 5 decades, so 72, 82, 92, 2002, and 2012, were very challenging years in the equity markets. And once those issues were mostly resolved, or somewhat resolved, they were followed by several years of very strong, powerful capital market rallies. And that's just an observation. We're not saying that's coming necessarily, but interesting trend nonetheless. We talk about 3 issues a lot, and we want to drill down a little bit on them. That's the fundamentals of the market, and then the macroeconomic issues, and then the sentiment issues. So, Kris, why don't we start with the fundamental issues in the market right now?
Sure. Well, fundamentally, Grant, when we look at corporations, we've seen relatively good earnings in this environment. Last quarter, we had roughly 7 to 8% earnings growth. We've seen several instances where corporations are raising dividends, buying back shares. They're trying to find effective uses for the cash that they've been accumulating on their balance sheets. Their balance sheets, by and large, remain quite strong, save for certain sectors. And the economy generally has been growing, not as fast as most would like, but it's a slow growth environment and it continues to be such. When we turn to the macro data and we look at, say, a country like China, we're starting to see growth slow there, and that's one of those negative macro issues that the market continues to deal with.
Sure. And you see the market, again, focus on most of these macro negative issues, not the positive stuff, and that is China's slowing growth, going from 8 or 9% down to 6 or 7%. Doesn't sound like a lot, but it is in the second largest economy in the world. And secondly, the Eurozone and the sovereign debt issues over in Europe, those aren't going to go away. We've been saying that for a long time. It just seems to move from one thing to the next. Now that the Greek election is behind us and looks to be somewhat positive for the markets, we're now very focused on Spanish bond yields because that looks a little bit like a housing bubble that went on in the United States in 2008. And then, if you look at the U.S. in particular, there's still stubbornly high unemployment there and some challenges around their housing markets, as well as some fiscal policy, political gridlock issues, Kris.
Yeah, absolutely. So all of those things they certainly impact investor sentiment. And often what we've seen recently have been overriding and dismissing a lot of the underlying fundamental positives that we're seeing out of corporations, leading to this sort of risk-on, risk-off trade where markets will move higher for a period. Boom, there's a piece of negative news, and all of a sudden we get a bit of a sell-off. And these have been definitely the short-term market drivers that have been causing this kind of environment.
Right. A couple of quick stats to help quantify how meaningful some of this stuff is. Greece last year, their total annual GDP was about $330 billion. That's going to probably come in around $275 billion this year. Well, that's the size of San Francisco's GDP. And as well, Kris, the Portugal equity markets, all in, are the size of a single U.S. consumer stock in the name of Whole Foods.
Right. So it's not necessarily the size of these issues, it's the contagion effect that they could cause on some of the larger economies in Europe. We want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at TwoInvestmentGuys.com.
Join us next time. We're going to continue to talk a little bit about the markets and some of the things that we see there. So until then, I'm Grant.
And I'm Kris.
And we're the Two Investment Guys.